Hey traders, it's Greg from Trade90X. Hope everyone had a great week. Hope it was profitable. And if you're not getting the results you're looking for, again, hit us up at hello@trade90x.com. We're here to help, and we can definitely help you. So again, today is the 20th. And again, welcome to another Trade90X weekend review. And again, it's rinse and repeat. Every time we do a pre-market, it's a weekend, it's a lesson, it doesn't matter. It's, listen, here at Trade90X, our job is every day, week, month, is to extract consistent income from the markets, regardless of the type of trading you do, or an investor, okay? Again, our only goal here is to help you build a skill to extract consistent income from the markets. And I mean that seriously. That's all you should be thinking about, okay? And how do we do that? Because a lot of people say it, but how do you do that? And if you've been watching me for the last year plus do these reviews or lessons, I have something that we created called the Trade90X Earn the Right to Trade Live process. And again, what does that include? Extensive education, backtesting, support, learning to be accountable. Remember, markets are set up to literally take the money of the people who are not prepared. So what would you rather be? Someone who's prepared, making money, or unprepared and losing money? I know, I hope again, I hope you had the question, I want to be prepared and make money. Now, you have to develop a process that's simple, easy, and most important, has an edge and proves consistency. Without that, you're going to fail. And that's just not in trading, that's in any business. All right. So the bottom line is again, here at Trade90X, we try to filter out the noise and focus on what's important. Stop wasting time on all this complex crap. Okay, it doesn't have to be that complicated. You know what the hard part is putting in the work in anything. Most businesses, the simple, the better. Those are the people that make the most money. You know what the hard part about whether it's trading or other businesses is putting in the work. It's understanding that if I have a strategy that's consistent, but if I put that repetition and I actually put in the work and see the numbers, then I actually can be ahead of most people and have that potential for success. So again, what does that include again in our Trade90X process? Again, you have to understand how the market works, the rules of engagement and any business, understanding what type of trading suits you. Too many people I see, just because I can do this doesn't mean you can do this. You have to, we'll find out whether or not what type of personality, your time, your resources, that's key. And I think, most people don't understand that. You must master risk and money management. Now, I can only speak for us at Trade90X. When I'm talking about active trading, we don't risk more than 0.5 to 2% of our capital per trade. We only risk 3 to 4% of capital per session. We focus on a minimum risk reward of 2 to 1 to target 1, and we have defined profit and loss targets every day within the 3 to 4%. That means when they're hit, whether whether you lose or win, we shut down the computer and we go to the review process. And as I said, part of our process every day, it's the same. Pre-market for us is 7 to 8 a.m. New York time. Live markets usually between 8 and 12, and then post-market when we finish. And of course, we have our weekly, monthly, yearly reviews like we're doing right now, our weekly. Now, when it comes to the risk and money management, again, I can only speak for Trade90X, but again, if you've traded any real money, why do I talk about this stuff every day, every weekend? Why? Because this is the holy grail. Okay. If you have proven consistency with your strategy and you know your numbers, you now have a skill that you can not only make consistent income, extract that consistent income, but have a skill for the rest of your life. And I don't know about you, but that's powerful stuff. Okay. So again, when we look at this stuff, if you understand, numbers and you understand real trading, then you understand losses and drawdowns are part of trading. It's nothing we can do about that. That's just part of a good plan, and understanding the psyche of it. And how that works is that you've proven consistency and repetition. It's the only way that I know in business to have success. And once we have that, then it's a powerful thing to have that most people are not willing to have. So bottom line is this: I see a lot of people on YouTube risking 5, 10, 15, 20+% per trade. That's great. But what happens when you lose those 5 trades in a row? And let me tell you, I don't care how good of a trader you are, it will happen. And if you're risking that kind of money, do the math. You're down 25, 50, 75, you've blown out your account. And the problem is most people, when they blow out their account, that's it, they're done. Okay, that's why we're such sticklers for this process, because we understand there's a learning phase until you can get to that point where you extract consistent income. All right. And you have no business trading live until you've proven that consistency in our backtesting sim process. Okay. Once you've proven consistency and you understand the rules of engagement, you understand that you've proven that you can, have solid risk management. Now you're ready to start small and start scaling every month. And only then, okay, I don't get how people think they could just watch a few videos, push a few buttons, and think that they're going to go up against professionals that have been doing this their whole life. It makes no sense, and it shouldn't to you either. So here are the other things also that and I talk about this every day. Again, if you want success, again, it's pretty simple. It's understanding the rules of engagement, having a process that where you're given that you understand how to backtest your process to prove consistency in that risk management, and then understanding the rules of engagement. Now, for trading, for us, I can only speak for us. All I care about, I don't care if I'm trading a 1-minute chart, 15, hourly, monthly, doesn't matter if I'm trading crypto, Apple, S&P, it doesn't matter to me. The questions are the same, okay? And they should be for you as well. Number one, what is the overall market context? So what I typically do, and I'm going to show you in the charts, which I do every day, I usually look at the indices, mostly S&P, just to get a good overall picture. Then if I'm not trading the S&P and I'm trading other symbols, then I'm going to go and look at those symbols, how they compare to the overall market. And this is done pretty quickly. Again, all I care about is if we're bullish, bearish in a range, or if I can't figure it out. And if I can't figure it out, why are you trading it? And again, the only thing I care about, I'll say it again, if it's a 1-minute, 15-minute, hourly, monthly, I don't care. The only difference is how long I hold the trade. And again, is it bullish, bearish in a range? Who has control? Bulls, bears, or indecision? Is that bullish, bearish in range obvious? The more obvious, the easier it is for us to make money. And do I have a clear proven a setup within, and again, when I say bullish, it's an unbalanced market. When I say bearish, it's an unbalanced bearish market, or a range, which is a balanced market. So ranges, balance. I'm just going to write, whoops, right here. So it's a balanced market. All right. So you'll learn that when you're part of the Trade90X Earn the Right to Trade Live process. Again, all I care about is the rules of engagement. What do when I look at the chart, start with the S&P, is it bullish, bearish, or a range from the larger? And I'm going to show you, I show you this every morning, so don't worry. I'll look at the longer term versus short term. I don't care what type of trading you do. So I have a big picture understanding. And then whatever chart I'm looking at, is that chart bullish, bearish, or range? Or if I can't figure it out, I pass. So that's why I talk about it. If you have choppy price action, pass. All I'm looking for are those obvious momentum in space. Okay. And if you have no edge, you pass. And then when we're done trading, we journal and review. It's rinse and repeat. And when we do get our A setups, you'll hear me talk about this. We understand we're ready to accept the risk, manage the trade, journal and review. That's how simple I want to keep it. Now, before we jump in and get the plan, now remember on the weekend I do I'll run through a little bit more symbols during the week because of time. The videos have been running too long. I only do like 4 symbols. I'll do the indices because here at Trade90X we typically trade indices. We'll do Apple, oil, gold, some currency, and we'll do that with either options, futures, or we'll just trade the stock or ETF. It's going to be up to you what's easiest for you. And then this can be used with any asset class. And I'm going to show you more. I'll do more diverse symbols on the weekend. So always please consult with your financial advisor or about risking capital. And then please, I implore you, have 6 to 12 months of emergency funds put away before you start trading live. If there's anything you don't understand about what I just talked about, make sure make sure that you hit us up at hello@trade90x.com, because again, we're here to help. We talk about the same things every day. It's the same rinse and repeat routine, and this is what helps you build that success. All right, with that said, let's go get it and let's go see what is happening. So first thing I'm always going to do is I'm going to go look at the news, and if on the weekends I'll use Forex Factory or Econo Day. All the information I show you is free. You don't need to pay for it. And again, what I'm looking for again is any edge to tell me, are we obvious, bullish, bearish, in a range, or indecision? That's all I care about. So I want to understand just some of the quick data, and I always want to know if there is any important news or earnings that are coming out. Why? Because important news and earnings are probably the only thing that can potentially change the personality of the market. So I go here, I filter. I'm only going to look at the US market. If you guys trade, other markets, then you'll look at those. And I only want the most important, and there we go. Next week's there we go. So not much coming on Monday. Tuesday, yeah, okay, we got Richmond Manufacturing, but really Wednesday, you've got PMI. Thursday, you've got unemployment, GDP, and then core PC. So, yep, Wednesday, Thursday, and Friday, important news. Again, we don't trade into news. What our hope is, news comes out, and it will move price quickly to one of our A setups within a bullish, bearish, or range market. That's it. That's all we're trying to do every day. Whether I'm trading S&P, Apple, crypto, it doesn't matter. If I don't have an A setup, your job is to sit on hands, and you'll hear me talk about that all the time. Now, earnings. Earnings Whisper, StockTwits does a great job of providing free for us. So here we go. And again, when it comes to stocks, it's important to know if we have, now, if you happen to trade those stocks, you need to know, but if there's important stocks that are personality changers, and I can see already that just on Tuesday, you've got Verizon, 3M, you've got Johnson & Johnson. These are important, Procter & Gamble. I mean, come on, you got Netflix, you got important stocks coming out. And then here on Wednesday, also, definitely. And Thursday, you got important news coming out all week. So just pay attention to when, before or after the markets. And, again, we just want to know if there's any personality change. But the bottom line is, our only hope is let this stuff come out, let it settle, and does it give us, and all I care about is, this is how simple I want you to keep it. Whether you're trading a 1 minute, 15-minute, hourly, does it give us an A setup within a bullish, bearish range market? And if there is no A setup and we can't figure it out, then you do nothing. And when we get an A setup, we understand, once we get the confirmation, we're prepared to accept the risk, manage the trade, and journal. That's it. That's your job every single day if you want to be a professional that extracts consistent income. Next, Fear and Greed Index. Again, what I'm trying to do here is just get an idea on what the sentiment is. And as I've talked about every day, we're definitely bullish, but when we get deep into these extremes, then that's when I get excited for potential pullbacks. Doesn't mean we're going to have personality changes. It just means pullbacks within that bullish or bearish market. Barchart.com, go to stocks, market momentum. And again, if you've been watching me, if you're new, welcome. It's the same here. So what I'm doing here is quickly, I'm just looking at the 50-day moving average, every stock in the market, and what's been going on over the last month. Again, if you understand the information to look at, it'll tell you what's happening. Look, we've been bullish, but we definitely had the momentum weakening. Now, on yesterday's close, we moved back up. So now let's see if this is the start of something. Now, ultimately, the charts are going to tell all, but again, I look at this data just to give me any type of edge possible. Now, finviz.com is one of our favorite tools, especially if you want to screen for stocks and you like to trade. And again, I love their sector information. And again, what we look at as active traders is the daily, weekly, monthly. Now, one day doesn't make a trend. Now, when I'm doing longer term position trading, retirement stuff, I'm going to look at 1 year, half year, and 3 months. But the short term is where as active traders, this is where we're going to play. Now, what I'm looking at here every day is what is the S&P and the sectors telling me? If they're all bullish and these are all green, then I know I have the confidence to take a trade more than a day trade. If S&P is bearish and these are all red, then I have the confidence to take a trade more than a day to the bearish side. But if these are all red, green, I can only tell you what we're going to do here at Trade90X. Most likely, we're going to be defaulting to our either scalp or day trading strategy, be flat at the end of the day, because last thing I want to do is be in trades that are not clear sky bullish or bearish. Okay. Again, I'm trading with the power of the market as an active trader. Position trading, that's different because you're talking about, years of holding for retirement type of trading. We're talking about active trading here. All right, tradingstore.com. I show this every day and I talk about the importance of this. Every Friday, this company does a great job for free. It gives us all the symbols that make up the market. I'm going to, mostly look at the S&P because it represents 75% of the market. And again, I talk about this every day. I don't care what they tell you on CNBC. I don't care what people tell you on YouTube. If you follow us at Trade90X, we give you the information to streamline, to show you, is the market bullish, bearish, or a range, or we have indecision. Okay, I don't need, and I want facts. This is facts. This is basically showing us the order flow, the 85% that control the market, not retail investors, but asset managers, bank managers, banks, institutions. And look, right here, you see this right here? I don't care what anybody tells you on CNBC or on YouTube. It's right here. It's telling you that the real information is 81% of the order flow is still bullish versus 18%. So what does that tell me is, now remember, this comes out once a week. So that doesn't mean we can't have counter trend trades within the longer term trend. But what this is telling me longer term, especially if you're a longer term swing trader, position trader, that dips can be bought in those daily, weekly, monthly levels until I see a personality change. All right, next, stockcharts.com. Really love this. Now, again, this is just a free version. And why I love this is, let me just put in the Russell. And then also, I like to just add Apple instead of this. All right. So what I love about stockcharts.com is, again, because remember I told you, if you learn the rules of engagement, all I care about is, remember I talked about, all I care about is a market that I'm looking at, or the overall market, bullish, bearish, or range. So the first thing I want to do is look at the overall market and then look at other symbols. Now, I happen at Trade90X, we trade the indices, we trade oil, we trade gold, we do trade some Apple. And, again, maybe some currency, but this picture right here tells me the long-term versus short-term. So long-term, I look at a year, short-term right here. Okay, so I don't care what symbol. When you are part of the Trade90X Earn the Right to Trade Live process, you're going to learn, okay, what is the overall market telling me? And then what is the symbols that I trade telling me? Okay, are we bullish, bearish, in a range in the long term? And then in the short term, are we bullish, bearish, in a range? Now, bullishness, if you don't know what it looks like lower left to upper right. Bearishness is upper left to lower right. Ranges equal highs equal lows. Whether I'm on a larger time frame or smaller time frame, bullish and bearish momentum, the more obvious, that's what we're going to be trading. I'm going to be trading momentum into pullback and pauses. The pullback and pauses are going to be where I enter in a bullish, bearish market. In a range market, again, and this is the same thing on a 1 minute, 15, hourly, monthly. Ranges equal highs equal lows. I break them into the rule of third. The middle is not where I want to play. In a range, my favorite trades are going to be top third, bottom third. Bullishness, if we get obvious bullish price action like this, at the top, at the bottom, at the top, if we get obvious bearish price action, short, and I play that range in the top, the fading the edges until it can prove back. Now, remember, a range is a balanced market where buyers and sellers agree, and I'll play that range until price can prove it can get back to an unbalanced bullish or bearish market. So just understanding what a bullish or bearish and unbalanced market is versus a balanced range and what the setups are puts you ahead of 99% of the traders, because you know exactly, you come in, oh, we're bullish, we're bearish, or range. Got it. If it's bullish or bearish, I'm looking for momentum and pullback. If I don't get it, I'm sitting on hands. Or if it's in a range, I break the range into thirds. I stay away from the middle. and I look if I get my obvious fade trades until price can move up. That's it. And then you wait for the A setup. Okay. And if you have multiple symbols, you're going to focus on that symbol that gives you the most obvious setup. And is every trade going to work out? No. But this is why we back test and sim, because we prove that that the strategy works. We proved that consistent strategy with our numbers. And then once we have a strategy that has consistency with numbers, now we can put it to work. And as long as we can, replicate that or results similarly in our live market, then we have a scalable thing, and that's what you're going to learn. And again, I don't understand why so many people make that complicated. It's not easy, but it's not difficult. You just need to understand rules of engagement, how to build a strategy that will give you consistency, and then have a process to build that repetition that it works. All right, now that we see the long term, let's go see the short term. Now look at here, right here. Here's the Dow, S&P, NASDAQ, Russell. Okay, so let's look. Dow, lower left to upper right. Look at this. Momentum into pause or pullback. Momentum into pause or pullback. And you'll have smaller pullbacks, smaller pauses, larger pauses, as I call them, or ranges. But look, here's the Dow now starting to break out. Here's the S&P. It went from lower left into this bigger pause or range. Now it's starting to break out. Same thing with NASDAQ. The only one that's lagging behind that concerns me is the Russell. The Russell still is moving upper left to lower right. Yes, we're popping, but we haven't broke above this swing high. So have to keep an eye on that. Now the FTSE also breaking out. So the most important indices right now are now breaking. The only thing that concerns me is the Russell is lagging. So I have to keep an eye on that. Now, the other thing that's very important to me is also the odds enhancers, the VIX, the volatility, 10-year bond, and dollar. Now, if these are moving down with obvious order flow price action, then that is bullish for markets. And look what they're kind of doing right now. If they're moving up with obvious, then that's bearish for markets, especially when I look at the VIX. That's coming back down, so no wonder. So right now, we are definitely longer term bullish. Short term, we are definitely went from lower left into that pause, and now we're starting to break out. So now coming into Sunday, Monday, will we get that follow through? I have no idea, but we'll go look at the charts and we'll have a plan regardless of what we're trading. So now, once we understand that, let's go to the charts. So I have two ways of looking at the charts. The first one is top down. I look at these, but then I'm going to show you, and which I do every morning, every weekend, because you guys in the community asked me to come up with a one chart view, make things simple where I can quickly look at maybe 1, 5, 10, or 15, 20 symbols quickly. I need a set of tools that are predictive, not lagging, that can help me tell the picture. You asked for very specific setups, whether it's a unbalanced bullish, bearish, or a range market. And you asked me to show you the exact steps to build that strategy and test it. So I do show you that every day and weekend, but let's go to the bigger chart. So the first thing I always do if I'm doing a full top-down approach is I look at the monthly. And I always back up that monthly with the commitment to trader. Remember, I told you, I deal with facts, not nonsense. Okay. And remember, when I'm looking at a chart, whether it's a 1 minute or monthly, now the monthly is important because it's our main trend chart and above, but all I care about is it bullish, bearish in a range, or I have no idea. And if it has no idea, then you have no business trading. But look what's been going on here. Listen, it's moving from lower left to upper right. Even the pandemic was just a blip, but we're moving lower left to upper right, or higher high, higher low. And look right here. Here was the pandemic. I'm always looking at the momentum, bullish or bearish leg. So look here. This was 2 years up, 1 year down, 6 months sideways, and now we're bullish. Okay. So right now we are bullish, and this is backing it up. And all I care about is what's been going on. Bullish. We had a pullback within this bullish leg. Now we're breaking out. And so what I'm going to do here on the monthly is here's kind of our breakout area. And here is the most recent high. So on this monthly chart, I'm anticipating that we're going to either move here or higher, or we could actually get a fake out breakout and reject. I don't know yet. So let's go look at the weekly. So now, once we understand the main trend, then I'm going to look at anywhere from a 15-minute to weekly, whatever chart you like to trade or what type of chart trading. But again, your job is to look at that chart and ask the question, Is there a bullish market, bearish market, range? What are the ace setups within a bullish, bearish, or range market? Whether you're trading a 1 minute, 15, hourly, weekly, monthly, it doesn't matter. So what am I looking for? Okay, so look right here. On the S&P, we are bullish. We were just in a range right here, balanced market, and now we're starting to break out. Not enough information yet. I don't like to trade pure breakouts myself personally. I like to get break and retests. So if I was trading this chart, I need to see a little bit more information, but we are definitely more bullish. All right. Then I go to the daily. I break it down. Okay. If I'm trading the daily chart, what is going on? Well, look here. Remember what I told you? Momentum into pullback or pause, momentum into pullback or pause, momentum into pullback or pause. Okay, so right here, we were in a range. See that right there? Now, when you're part of the Trade90X community, you're going to learn what are the A setups when a pullback or pause. Okay, momentum, bullish or bearish. Is it obvious? Do we have pullback and pause? What are the setups? You'll learn that. If we go from a bullish or bearish market to a range balance market, what are the setups? What did I talk about ranges? You break the range up into third, bottom, middle, top. The middle is the least likely I want to trade. All right, and I'll show you the setups in a second. Because I like to use then go to an hourly chart. So for us at Trade90X, I don't care if this is crypto, Apple, S&P. The reason I start with the S&P because it represents 75% of the market, and we happen to trade a lot of S&P. And you should be checking the S&P regardless of what you're doing, just to have an idea of what's going on with the market. So for me, my position trading will be usually weekly, monthly, and then swing trading will be, I look at the month and weekly, and then I'll bring it down anywhere from a daily to a 60-minute chart. So let me show you. So again, your job is to understand what is going on. Now, some of the odds enhancers that I'll use on a 60-minute is this is where the week starts. This thicker black line is where the yearly is. This purple is the high low for the weekly, and the monthly is being covered up by this yearly is orange. And then I'll have the previous day's close dotted line, and I'll have the open. These are the opens right here of each day. And again, my job is on the 60-minute, same thing. Okay, now one thing also I will tell you, when I do the one chart, the Trade90X 4 context one chart strategy, I'm going to use the 60-minute as my anchor chart. So what I'm showing here is very similar. So if I'm trading this chart, I have to look at this chart. Again, I understand what the bigger picture is. I have these bigger decision points in right here, but what's going on? I'm moving lower left to upper right. What is that telling you? It tells me that we've been bullish over the last few months, but what's going on now in the shorter term is we have definitely been, I'm going to squeeze that up. We've been in ranges. Look at equal highs, equal lows. So remember what I talked about. Your job is on the time frame you come in, we're going to look at the longer term and shorter term. But if I'm a 60-minute trader, okay, what are the trades that I am going to look for? Okay, here was my range. We've been in a range the last few weeks. So the trades were the following. These are the trades I look for. And am I always going to get my perfect setup? No, but here are the setups that I was looking for that I talked about. So if I'm trading a range, whether it's a 1 minute, 60-minute, or monthly, I'm looking at the top third. If I get double top, I'm looking to short back to the middle and bottom. If I get the bottom third of a range, and I get bullish, I'm looking to fade long. Now here, if we get the fake out breakout, I'm looking to short. If we're down here, I get the fake out breakout, I'm looking to fade long. And if I'm looking to go long here, what I'm going to be looking for is this. I'm going to look through those pullback and pauses, higher highs, higher lows, that looks like that. And if I'm going to be bearish once price breaks out of the range, okay, and I'm always paying attention to these weekly, monthly, yearly levels because they are predictive, not lagging. All right, so let's talk about what we talk about, and then I'm going to jump into the Trade90X 4 context one chart process, and then we're going to go through a lot of symbols. Okay, so what did we do? I look at news and earnings. Again, remember what I talked about? Always want to know when they're coming out. We don't trade into them. I want to hopefully when they come out, it moves price to one of our ace setups in a bullish, bearish, or range market. If not, we do nothing. Fear and greed index kind of gives us the sentiment. We're more bullish. Again, right here, I'm looking at how many stocks are above and below their 50. Right now, we were getting weak, but now it looks like potentially we might be starting to move back up. We'll see. And then here, I'm looking at the sector information. The 3-month is definitely telling us more bullish, but we've got a lot of indecision here still. All right, but we'll go to the charts. As I said, the longer term controlled by the people that matter are definitely still bullish. And then again, longer term, we're still moving lower left to upper right in the 3 key indices. I said the Russell is a little worrisome. And then the short term, we have that confirmation on the Dow, S&P, NASDAQ. We went from that lower left, remember, momentum into pauses, and now we're breaking out. But the Russell does concern me, but my odds enhancers are definitely, especially the VIX, is definitely in line. All right. So now with that said, I just showed you our top-down approach using the monthly and then breaking it down from weekly to daily up to the hourly. And then I showed you, if I'm an S&P trader on that 60-minute, what is my trade? Okay. That's how simple we keep it. Now, you guys asked for it and I created it. And by the way, I do this every day. Let me take that off. It's a little annoying. Those are the sessions, but I'll get back to those. So basically, it's the same thing I just showed you, but I'm going to add a little wrinkle to it. So again, I'm going to show you what these tools are. I'm going to tell you exactly what the setups are, and then I'm going to give you the exact steps. So then if you want to go and back test it and then show me the results. So as I mentioned, you already know the risk management. I talked about what we use. Okay. I already talked about, we use the hourly for this as an anchor chart. Here is the weekly. The yearly is the blacker line right here. The purple is the right here is the weekly. Actually, let me the weekly right here, and then the monthly, which is being covered up by the yearly, happens to be the monthly yellow. These levels are all predictive, not lagging. They can be used as entry, stop, and targets. And what I love about it in the short term, it tells us, do we have an unbalanced bullish market above the previous day's high, an unbalanced bearish market below the previous day's low, and anything in the range is going to be a balanced day. Now, the other thing that's important is I want to know if these ranges are wider or narrow. The narrower the range, nothing's 100%, but there is a higher probability we break out of the range. If it's a wider range, more likely, higher probability we're just going to stay inside that range. Okay. So now that you understand the tools, let me tell you the setups. So we have 3 setups, and then we have 1 do nothing. So let's start with that. So context 4, and again, guys, I talk about this every day. Everything I show you here, I do every day. So context 4, anytime you have choppy sideways action where we don't have enough information yet, we call context 4. And there's a bunch of them, but anytime you have context 4, you're basically, your job is to do nothing until you have obvious context 1, unbalanced bullish or bearish markets, or context 2 and 3, which are going to be range trades. Okay. And as I mentioned, understanding the difference between unbalanced bullish and bearish setups and a range setup puts you ahead of 99% of the trades. Why? Because you understand the market context. You know if it's an unbalanced bullish or bearish market, what the setups are. And then if it's a range market, you know what the setups are. So context 4, I just showed you what that is. It's basically choppy sideways action, no edge. All right. So this is our anchor chart. I'm usually going to use a 1 or 5 minute with my anchor chart to basically look for my entries. I don't care if you want to trade range, Renko, it doesn't matter to me. But if you don't have a process like this that tells you what is the longer term doing, what is the shorter term doing, do we have an unbalanced bullish, bearish market or a range, and what those setups are, it's not going to help you. So again, right here, let me show you setup number 1, context number 1. So context number 1 looks like this. If we are above the previous day's range, like right here, we broke right here, and we're doing this, that is a beautiful context one, unbalanced bullish market. We're looking for those momentum into pause and pullbacks to enter. And I hope you can see that this was a beautiful trade yesterday. All right. Now, if we're a bearish unbalanced market, again, it's going to look like this. It's going to be higher highs, higher lows below the previous day's range. And we're looking for those momentum into positive pullbacks for a continuation trade. So you have context one, bullish or bearish. You understand context four. Now, what is context two and three? So if price is in the range, I'm going to be looking for this. Remember I talked about ranges, bottom, middle, top. My favorite trades, top third, fade. If we get the bearish price action, fade right here. If we get bullish price action, that's context two. Context three is going to look like this. So if we would have done this, fake out, breakout, wait for the personality change, see how I'm changing, then we fade short. And if it looks like it would have done this, and it looked like the bears had control, not so fast, and we come back in, there we go. So now you understand context four, no edge. You do nothing. You now understand context one setup, unbalanced, bullish or bearish, above or below the previous day's range. You now know if price is inside, we have a range. The setups I look for are top third, bottom third, fake out, breakouts. I don't care what the symbol is. Now, let me show you. You now know what the tools are. You now know what the steps, you know what the tools are that are predictive, not lagging. You know the setups. Now let me show you all the steps. So step number one is going to look like this. I'm going to go to the weekly. This is step number one, always in the Trade90X for context, one chart view. So what am I doing here? And why am I going to the weekly or monthly? I want to understand where price is it bullish, bearish, and range? And look what we had here. We've been bullish. We were basically pause, and now we're starting to break out. So what I'm going to do, I'm going to put, these are, I call monthly, weekly decision points. Where did price pause most recently and break out or leave quickly? Well, these three right here. All right. So step number two, always the same. I'm going to go to the 60-minute. I'm going to squeeze up the chart, and I want to understand what is the price action over the last few months and week. Well, we're moving lower left to upper right. We have been bullish. What has been going on over the last week or two? Well, you've been in a range. And here, I'm going to tighten it up a little bit. Right here. There we go. We've been in a range right here. So if you look at it, and if I'm trading, remember I said, if I'm trading the 60-minute chart, this is what I love about this process, is it's black and white. Are we unbalanced bullish? Are we unbalanced bearish? Are we in a range? So you know that we've been in a range. So I showed you the setups before right here. Top third, we didn't get it. We didn't, we have bottom third. Fake out, breakout if we get it. Fake out, breakout if we get it. And now look what's happening. If we continue on like this right here, so if we continue on like this, then we continue on unbalanced bullish, and we look for the momentum, pause, pullback. Same thing here. Okay, it's a yes or no question, and if it's not obvious, we pass. So now, yes, let's go down to a 5-minute chart. Now I'll trade anywhere from a 1 to 5 minutes. So let's see what the trades were. Now I know this is hindsight, but again, we're on the weekend review. So we typically trade between 8 o'clock and 12 o'clock right here. All right. So let me, I'm going to bring it down even to 3 minutes so you see a little more structure. So remember, we come in between 7 and 8. This is where we were right here yesterday. I talked about it yesterday in the pre-market. We were in context 4, and then the overnight traders got a break and retest from an inside day, a range day, to an unbalanced bullish day. They had a beautiful setup. And then look what happened here. The trading gods gave us another opportunity. You came back. So what I talked about, one of the setups was going to be, if we reject the previous day's range high, we're going to look for a move up. If we would have come back in and did this yesterday, then we were going to short. If we would have broken, retest like that, then I would have faded because it would have come from an unbalanced bullish day back to an inside range day. But this was a beautiful setup right here. We got right here. Again, I use structured stops. I'm going to go below the most recent candles and key levels. And what are we looking for? We're looking for 2 to 1 always as a minimum. Now, I always recommend when you're a newer trader in the Trade90X Earn the Right to Trade Live for 3 to 6 months, every trade's off at 2 to 1 until you've proven that consistency. Once you prove the consistency, then you can go for those bigger targets. And the bigger target yesterday was up to that yearly monthly, which was 5 to 1, which, again, I will tell you, you're not going to get trades like that every day, but beautiful setup right there. I mean, that was the A setup right there. And I hope if you didn't get that A setup, then you should email me and tell me why. And you guys should be sending me your charts because it's the only way. So for me, this was a beautiful setup. That was the A setup. This was a good setup, but not as good as this one. So that was your good setup. And remember, all you need is one good trade a day, A setup, and one of the symbols you trade, and you're good. All right. So that was the S&P yesterday, and it closed bullish, with the price above. So again, let's rinse and repeat. Let's go to the NASDAQ. So let's go to the weekly first. Step number 1. Again, let's go see what it was. So remember, we talked about in the pre-market yesterday, we talked about that we are absolutely bullish. We had this pause right here. Remember, this is what price does. It goes from unbalanced bullish to pause or pull back, either back to the unbalanced bullish or it changes personality. And same thing in a bearish market. We go from an unbalanced bearish market to a pause to an unbalanced bearish market. So again, this is my monthly and weekly levels. This is where price paused and left the station quickly. This is what we do in step number 1, always. Step number 2, we always go to the hourly chart. I squeeze up the chart. And what am I doing here? I want to see what's been going on. And look, we've been moving lower, left, up, right. We've been bullish. But what was going on here? We can see that price was absolutely going sideways right here. And then finally it broke out. All right. So right now, yesterday, just looking at the 60-minute chart, again, if we were trading this chart, we had setups right here. We went from look at this. We had an outside unbalanced bearish day. And again, what are we looking for? We're looking for those momentum into pullback and pauses. Again, if we're an unbalanced bullish or unbalanced bearish, we're looking for those clear momentum into pullback or pauses, or if we're bullish, higher highs, higher lows, bearish, lower highs, lower lows. It's black and white. And if it's not obvious, don't trade it. If we're in a range, we're boxing the range up. We're looking for the top third, bottom third, fake out breakouts until price can move back to an unbalanced bullish or bearish day. And again, this is why that repetition, understanding the rules of engagement, understanding what is market context, what are the A setups, whether you're trading a 1 minute or a monthly or 60-minute in a bullish bearish range, does it fit my risk and management criteria? And then over a body of work in my back testing sim, was I able to prove consistency and follow my plan? Okay. And once you do that, you're ahead of 99% of the traders. Okay. So NASDAQ, if we go down to 5-minute or 3-minute, again, looking at the setups right here, we were above the previous day's range. Now, again, as I always said, and also I talk about this every day. If there's somebody who knows how to program with TradingView, I'd love to make all these tools I use in one, like this here. When I do this now, I got to use all these. I'd love to make all these tools into one Trade90X, and then also have these vertical lines where, again, I can program them. So typically we trade between 8 and 12. Listen, if you don't mind trading these other hours, as long as you've back tested and proven consistency, I don't have a problem with it. We just like to trade between 8 and 12 because of the most, volatility and liquidity in the market. But hey, whatever works for you, that's what we're going to do at Trade90X. We're going to help you build that plan of consistency so you can build that skill to extract consistent income every week, every month, every year. Okay. So really you had beautiful setups right here. And these green lines, by the way, these are the hourly closes, and these are extremely helpful. So for me, here were your setups, break and retest right here. So you had multiple setups yesterday, trading NASDAQ, and even overnight traders got paid. All right. And absolutely bullish. Let's go to the Dow. And again, remember, I'm going to do a bunch of symbols today on the weekend. All right. So here we go. Weekly. Again, it's rinse and repeat. Rinse and repeat. Okay. So I'm going to do this right here. Let me just put back on. I don't know what happened. I must have taken those off. So it's a good exercise. You can see I'm putting on, these are the levels I'm looking at. Open. So you can see how I'm doing it. This is what I have to do. You know, again, that's why I want to get a program. So I have one. And here we go. Previous hourly close. Beautiful. Take that off. There we go. All right. So step number one. What is price telling us in the weekly? Remember, it's the same rinse and repeat. Trade90X, 4 context, 1 chart view. Step number one, we go to the weekly. Why? I want to see what the main trend's doing. You know it's bullish. It's moving. Look, I then want to only look then at the areas where price has paused and left the station quickly. And now we can see that right there, these two areas. I only need the most recent one. Step number two, always the same. Go to that hourly chart. What I'm trying to do here is what's been going on over the last few months, and then in the short term, we're moving lower left to upper right. What's been going on right here in the short term? Well, I can tell you we've been in a sideways range. Step number three, what are we doing in the shorter term? Okay, and that's when we use the previous day's range right here, high, low, midpoint to kind of tell us. But we know that if we're a 60-minute trader, if I'm a 60-minute trader, what am I trading? I'm looking for top third, bottom third, fake out breakouts until price can prove out of this balanced range to unbalanced bullish or bearish market. That's a 60-minute chart. If I'm going to be a scalp or day trader, we go to that 1 or 5 minute, so then maybe we can find a trade within it. Okay. So when we look at that, what was price telling us? Remember, we're looking at between typically 8 and 12. Okay. We go down to a 3 minute, see a little more structure. So I hope that when we came in right here, overnight traders got paid right here. And then look what happens here. We get a bunch of choppiness. And again, this is the open, no surprise. And this is why I said sometimes you give it a half hour and the open, and look what it gave you. It gave you a beauty right here. Look at this. A lot of chop. I don't want to trade chop, and either do you. This is just chop. And then look at that. You got the momentum break and retest. Now, when I look at candles, I think of it a little differently. I'm only interested in candles in an A, whether it's a setup, if it's a unbalanced bullish or bearish, or it's a range market. And what I'm looking for, whether it's a pullback or pause, or if it's a range, at a key, bullish decision point like this, I'm looking for pin bars, wick on bottom, engulfing green double dojis. If it's a bearish pullback or pause or break and retest, I'm looking for the shooting star, red engulfing, and double doji. Okay, that's it. And if I don't have that edge, I'm not interested. So for me, this was just an absolute beauty right here. Again, I want to be below the key levels in most recent candlestick action. And right here, this would have been our first test to see, and we broke it. And then 2 to 1 is ultimately our favorite. And then if you're a seasoned trader with proven consistency, then you could have gone for the bigger targets. All right. But really just a nice setup. And again, I look for the A setups. I'm not interested. Now, if here was another nice setup right here, this was another nice setup. If you missed this one right here, why? Because it had the higher high, higher low, momentum into pause, pullback, and then you had these 60-minute closes helping you, giving you some, whether you, if you like to call it support, supply, demand, whatever you want to call it. But again, it gave you a reason. So that was the Dow closed bullish. Let's go look at the Russell. Same thing, rinse and repeat. I really hope you're understanding. I do this every day. I've been doing it for over a year. I hope you're understanding the value. I'm giving you $1 million stuff here free. And if you're not asking questions and sending me charts at hello@trade90x.com, then you're missing out, because I'm not going to do this forever for free. But again, I'm doing this now because you know what? I love doing it. And it's time that, you know what? I see so many people making things so complex. Listen, I'm somebody who's been building businesses 25 plus years. I understand risk. I understand process. Okay. For me, that's what I was able to take from my business experience and put together in trading. Trading is not that it's hard. It's what's hard is understanding the rules of engagement, and then taking that rules of engagement and putting it in a process that someone can follow, where it's replicable, simple, and then have a process where they can prove it out. Okay, that's what. And then understanding whether you're in either in an A setup, an unbalanced bullish or bearish market, you're in a range. Because once you understand that, whether it's a 1 minute or monthly or 60-minute, you know what the setup's like right here. Here's the Russell. If you're a if you're a position trader on Russell, look at this. This is the weekly. The weekly's telling you it's in a range market. So what do we do with ranges? Bottom third, top third, fake out breakouts. Look what we had here. If you were a Russell trader, you had a fake out breakout, and then you had a top third rejection with a shooting star engulfing. I mean, does it get any better than that? So this is why I tell you, you have to understand whatever symbol you're trading, look at the longer term like I'm doing. This is why I created this process. Step number 1, in the weekly, it tells you. Now we go to the hourly, you see what you see. Look at this. Understanding this, you see, because this is where a lot of people who trade short term, they get caught up. They don't even know that there's a bigger range in play. Now, the 60-minute from the bigger range allowed you to see inside that bigger range and get the trades. Look at this. You had a break and retest. Beautiful right here. You had a break and retest right here at the top third. All right. So now what do we have in the shorter term? We see that price has been bearish off the top third. It went into a range. Look at this. It went into a range. Let me put this lines right here. I'll make shorter term lines in blue. So we had a range, and look what happened. Now, this is the difference also you need to understand. When we break out of a range, so if it was going to be bearish, it's going to look like this. It didn't do that. What did it do? When you start seeing this below and above a range, a lot of times what this is telling you that it's failing, and then you're going to get the fake out breakout back into the range. So if I'm an hourly trader right here, what am I trading? Top, bottom, fake out breakouts until price can prove back like this. And it didn't do that. It didn't do it right below. Look at this. You didn't get this. All right. And you'll learn more about this when you're in the process in our Trade90X. But again, I'm trying to give you $1 million worth of stuff here. So now we go to step number 3. We go down to our 5-minute to see, okay, we know that the bigger area is there using the previous day's range. Are there some opportunities to get the trades, you know, in the shorter term? So again, let me go to that 3-minute. Again, we are going to typically trade between 8 o'clock. And again, we do our pre-market between 7 and 8. 8 to 12 is our sweet spot typically. Post-market is when we're done trading. All right, so let's just look. We'll just put that area right there. So again, when we came in right here, look at what we had. We had context for price action. You had no edge. There's nothing to trade there. So now look what we had. Look what we had here. Beautiful. You had momentum. It looked like this is what you call a fake out breakout. The buyers look like they got it. And then right there, boom, there was your short right there. The only thing that I don't like is I hate trading. I'm not going to lie. I hate trading big candles. Why? Because the bigger the entry candle, the more risk. So this would have been a judgment call. And again, when you back test, this would be part of our criteria. Smaller candles versus larger candles. What it does, what happens to our results when we trade that? For me, I know when I trade these bigger in the smaller time frames, I don't typically like them. All right, that's just me. So what we could do is we could also go down to a smaller time frame to see if we got a better candle. Not that much better. But anyway, so this was an area that I typically would be all over because you had the fake out breakout right there. It went from an unbalanced to a balanced range. And then this would have been the other area. But here's the one thing. Remember, I told you I like to trade top third, bottom third, fake out breakouts. Now, I do have one rule about the middle. If you're going to trade the middle, here are the rules. Number one, you must have space 2 to 1 to the top or bottom. I'm going to go half size. And here's the most important thing. If I have not proven it with consistency in our backtest and simming process, I'm not doing it. Again, until you have proven consistency, you have no business trading it. All right, so these are the Russell. So I just did the 4 indices. Now, because it's the weekend, let's go look at other asset classes so you see that this works for anything. So step number 1, rinse and repeat. You're going to go to the weekly chart. It's no different. Here's oil. What am I looking for? Well, it looks like oil has been, we've had this bearish momentum and a pullback. It looks like it's definitely more bearish than bullish, but it's definitely more sideways. So here are the areas where price has most recently kind of paused, and now we're sitting in a range right here. I'm also going to put this area right here. So these are the areas of interest in our monthly and weekly, and you can see we've been bearish, and now we're kind of in a range market. All right. Step number 2, let's go to the hourly. Sorry, not the daily. Okay. Steps are always the same. Tools are always the same. Setups are always the same. So again, what's been going on over the last few weeks? And let's put it in, and you can see we've been bearish, upper left to lower right, and now we've been in a range. We put the bottom here a little tighter. So what would we do if we're an oil trader trading this? I hope you said we're in a balanced range day. I'm going to be looking at top third, bottom third, fake out breakouts until price can prove it's an unbalanced bullish or bearish setup. Okay. Step number 3, if we're scalping or day trading, we know we have this bigger range, but now we're going to look and see, okay, what is the previous range telling us, and do we have space to trade within it? All right, so again, let's go to that 3-minute. Let's put in the vertical line. Now remember, oil opens at 9 o'clock, but again, we're typically going to start at 8 o'clock. Remember, US market opens at 9:30 for stocks, indices, all that kind of stuff. But remember, futures, overnight, Forex, those, the European session, the electronic starts at 8 a.m. But oil, again, opens, their official open is at 9 o'clock. Well, it used to be anyway. So right here, this was oil. So again, when we came in right about here, remember, here's previous day's high, midpoint here. We went from an outside to an inside day. Okay. So right now there was nothing here. So look at what happened. It's happened to be a really nice setup, actually. Look at this. This is what you call a fake out breakout. The buyers looked like they were going to have their way, and then look what happens. You had a beautiful fake out breakout right there. Beautiful. I mean, really nice. And look at that candle. You had a shooting star with an engulfing, put it above these most recent candles and a key level. And this gave you down to the official target 1, 2.76. That was the middle. Because usually, now remember, our first is always going to be 2 to 1, which was right here. But then if you're seasoned, our bigger targets are always going to be, if we're at it, when you're in a range, top third, you're going to be at the middle and bottom. If you're at the bottom, you're looking at the middle and top. All right, so that's oil, and oil finished the day within the range. All right, let's go look at gold. Again, I'm trying to show you as many asset classes so you can see it doesn't matter. So again, step number one is always going to be the weekly. Now, I hope you saw when you look at gold, like me, you're going, oh, wow, this thing's been in a range for almost, God, 3 years, 4 years. So here, I'm just remember, ranges are equal highs, equal lows. Remember, it doesn't matter if it's a 1 minute, monthly, weekly. What does this tell you? It tells you you have range price action. When you have range price action, you know, because you're ahead of 99% of traders, what are you doing? You're boxing that area. What are the setups? Top third, bottom third. Look at all the setups you had. Top third, fake out breakouts. You're looking for fake out breakouts, top third, bottom third, fake out breakouts, top bottom. That's it. Until price can move back to like this. Until price can move, start doing this. Okay, this is why you're ahead of most traders. So if you're a big time trader, a position trader, this is a beautiful opportunity to short, the tops, the top third and bottom thirds, because you've got the price action. All right, so now let's go down to the 60-minute. And again, like the Russell, you know that we have a bigger range in play. So I'm looking over basically what we're looking is over the last few months, what's been going on in the range. You can see the 60-minute gave you that opportunity to take the fake out breakout. It gave you a rejection of the top third twice. So now what's going on is we've been moving lower high to lower low. Let's go to the 5-minute. So again, for people who want to scalp and day trade, we know what's going on in the bigger picture. But now, again, oil, things like currencies and gold and bonds, their opening is 820. So let's put 820 right there, because that's going to be right near our 8 o'clock anyway. So I don't want to trade into that open. So let's go down to a 3-minute. So here, when we came in right here, we were trending up. The overnight traders had multiple opportunities to get into a trade. All right. And then we came into when we were looking here, we then got another opportunity to trade gold right here. Those were your shots right here. We came back. Remember, we're in an unbalanced bullish day. So what are we looking for? We're either looking for the continuation, or I'm looking for a rejection back to that previous day's range. And then if we were going to get a personality change, it would have done this. It would have gone from an outside bullish day to that inside range balance day. And then we'd be looking to the fade trade. And then gold traders, again, following our A setup, got paid, and it ended up closing bullish. Okay, let's go look at the euro. Again, let's look at some currency. Let's look at some crypto. I'll look at a few stocks. Okay, again, it's the same rinse and repeat. Go to the weekly. Okay, so what is the bigger picture? Well, look at this. We're moving lower left to upper right. Now we've had some momentum, but look at this. We're in a range. We've been in a range for quite a while on the euro right here. Okay, so based on that, what are we looking for? Again, if we were looking at this chart, top third, bottom third, stay away from the middle, fake out breakouts until price can move back to an unbalanced bullish or bearish day. That's it. Step number 2, squeeze the chart up. What is it telling us? Well, it tells us we're inside that bigger range, and I want to know that. So we have been moving lower left to upper right, but we're inside a bigger range, and we're kind of in the middle of it. Okay, so again, if I'm going to be a 60-minute trader, I want to be top third, bottom third, fake out breakouts until price can break out. That's where I would want to trade. Okay, now if I'm going to be a scalper or a day trader, we're going to use the previous day's range to help us within those bigger ranges. We'll go to a 3-minute. Now remember, this is a currency, so it starts at 820. So we'll go to 820 right there. So tell me what the overnight traders saw. So we're basically been, hanging around the middle the whole time. We keep rejecting the open and the middle. So we know this area has been a point of interest. Now, remember what I talked about the middle. Me personally, I want to trade parabolic moves. rejections. If it's a range day, top third, bottom third, fake out breakouts until price can get to an unbalanced day. If you're going to trade the middle, here are the rules again. You must have space of 2 to 1 to the top or bottom. Go half size, and you have to have proven in your backtest sim process that you were able to have the consistency. But this happened to have been a nice trade right here. Not gonna, like I said, we don't sugarcoat it. You had a break and retest coming in the time frame right here. And this trade actually worked out beautifully. But again, if you don't follow the process I talked about, you have no business trading it. All right, let's go look at a few other ones. I'm going to go look at Bitcoin. Again, I don't care what symbol it is. It's the same process. This is why I love this. This process is replicable. It's simple. It can be back tested and proven. It has easy setups. It has easy steps. Okay, step number 1, go to that weekly or monthly. Again, I'm going to put areas where prices kind of paused and left quickly. Okay, it's all I'm interested right here. Paused and left quickly. The most recent ones right here. Step number 2, I'm going to go to the hourly chart. I'm going to squeeze it up. What has Bitcoin been doing? It's moving lower left to upper right, no doubt. Now, what has it been doing right here? It's in a range. It's absolutely been in a range. It had a range expansion. And then this is what ranges do. Okay. If this was going to be bullish, once it broke out, it would have done this. And that's not what happened. What happened was this. Okay, that's why I said you need to learn, and again, you'll learn all this. So basically what Bitcoin has been doing, it was bullish. It was in a range for since December. We broke out, but what happened was we just kind of double topped above it, and no surprise, we hit a monthly and yearly levels. That's why I talk about always got to watch those weekly, monthly, yearly levels. All right. So if you are an hourly trader, you're in the range right now. Okay. This happens to be the range expansion. So what do we do in a range? Well, we got a setup right here. Bottom third, top third, fake out breakouts until price can move above or below. Definitely got a setup here, right here on Bitcoin this week. Now, if we're scalping or day trading, let's go to the 5-minute. Remember, now Bitcoin is live as we're talking. So let's see what we have here. So right now, you're trading Bitcoin. What do you have? Here's the open and previous day's close. Here's your previous day's high. There's your midpoint and low. So we know the range is pretty wide. So, but again, what am I looking for? Again, I'm looking for top third, bottom third. I'm looking for parabolic move rejections because remember, it's a range day. When it's a range day, what does that tell us? It tells us that buyers and sellers agree on price. What are the setups that we're looking for? Top third, bottom third, fake out breakouts until what? Price can move to an unbalanced or unbalanced bearish or bullish day. That's it. And your job right here, this is basically context for price action, no edge. So you need to sit on hand. So this is why what we do is I have another chart that basically has, say, 5 to 8 symbols that I trade every day. And all I'm looking for every day is I do my process that I showed you. Step number 1, go into that weekly, looking at, again, let me do, let's see a stock. AMD's been rocking. All right, let's go a stock. So again, I'm going to do step number 1. I don't care what the asset class or the symbol is. Step number 1, are we bullish, bearish, in a range? We are bullish. Step number 2, where were the areas most recently where price paused and kind of left quickly? Well, these were the 2 areas. Now we're breaking out. Okay, so we know this is super bullish. I don't like trading pure breakouts myself. I like break and retest. So let's go to the hourly and see what else we have in the shorter term. So we see that we've been bullish, lower left to upper right for quite some time. Okay, now look at here in the short term. Price was kind of sideways range bound right here. Okay, so what am I going to do when we're sideways ranges? Top third, bottom third, fake out breakouts until it breaks out. And that's what it did. And then look what it did right here. If I was trading the 60-minute right here. These are your setups. Momentum into pause or pullback. And if we get the candles, which we did, you got the engulfing, you got engulf right here. So these are setups right here. These are beautiful. Now, if we are going to be day traders and scalpers, we're going to look at the shorter term. We know the bigger term player. We know that it broke out here. And look what it's been doing since it broke out. Okay. But again, we're only interested in what it did Friday right now because it's what we're looking at. And look what it did. So we started out in the middle, inside day. Okay, so what did I say about the middle? And you had actually a setup, but again, what did I talk about the middle? If you're going to trade the middle, number one, you have to prove it in the backtesting process that you had consistency. Number two, I want to see it have at least 2-to-1, which I can eyeball. It did. I'm going to go half size, and it's got to have the setup. Well, it had the setup. Now, this one, even though I would not take it because it's too close to the top, but really for me, that was your A setup right here. So this was a good setup, but this was the A setup right here. Why? Because we had beautiful momentum, okay? Break and retest with a beautiful engulfing candle. There was your setup. You have a key level right here. Get right below there. And this trade gave you almost 3-to-1. So it's also, having that patience. Let me see, what else can I show you? Let me do one more. What else was NVIDIA? NVIDIA's been rocking. So here we go. So again, step number one, go to the weekly. We know that it's bullish. Okay, no problem. We see here that it's been, remember, this is what price does. It goes from an unbalanced bullish market to a balanced range market, bound to either a bullish, or if it's going to fail, it's going to go back to an unbalanced bearish. Right now it broke out. So in this time frame, I can't do anything. For me, I don't like those. So I'm going to go down to my hourly. Again, what am I doing in step number two? I'm looking left and I want to see what's been going on. Well, we see that we're in the bigger range. We've been in a range. So if you were trading the hourly chart over the last few weeks, what are you looking for? Top third, bottom third, fake out breakouts until what? It breaks out to an unbalanced bullish market. So right here, look. Here were your setups. You had momentum into pullback and pause. There you go. So now let's go to the 5-minute chart and see what we had yesterday as a setup. So again, remember the previous day's range helps us in the short term. And then when we break above the previous day's range or below, we're looking at those weekly, monthly, yearlies, and no surprise, we hit a monthly and weekly. But again, remember, above the previous day's range is an unbalanced bullish day. Below it is unbalanced bearish. Inside is a range day. So we know when we come in, if it's unbalanced bullish, unbalanced bearish, or range, we know what the setups are. Well, look at what happened here. Price gave you a break and read. Here was the open right here. So this is how I would have traded this yesterday. So here is a key level. Here's your previous day's high. The open is very important. Okay. So we held, and then the open, look what we got here. We got a break and retest of that open. Beautiful trade. That would have been my setup for me right there. And you had an hourly close. So my setup would have been this for sure. I would have kind of like that. And this setup gave you 2-to-1 right there. Now you could have had your stop because you had two levels here. So I don't have a problem with that. So this trade either gave you 2 to 3-to-1. Beautiful setup right there. All right. So let's recap and let's go through it again here. So let me go through it. All right. So what did we do? We looked through the news and earnings. Remember, we talked about news and earnings. We don't trade into that. Fear and greed is telling us more bullish. This is telling us based on the 50-day moving average that we are bullish, but we had some weakness. Now we're starting to see maybe some bullishness again. We definitely more bullish in the long term, but short term, a little bit more indecision. Long term, definitely bullish. And then we're seeing here, long term, we've been bullish, lower left to upper right, and short term also lower left to upper right into the pause. And now we're starting to break out on the key indices. All right, then we go to the chart. I showed you the top-down approach, looking at the monthly, weekly, daily, and hourly charts. And again, understanding, are we in an unbalanced, bullish, bearish, or range market on the chart that I'm going to trade? And then I understand those setups. Then I showed you the Trade90X 4 context one chart view right here. So again, I'm just going to show it to you one more time, and then we're going to get back to the weekend and enjoy it. So again, step number one, using the S&P. Are we bullish, bearish, or range? We know we've been bullish. Momentum. We were in a range. Now we're starting to break out. These lines right here are the most recent areas where price paused and left quickly. I call them my monthly and weekly decision points. Step number two is always the same. Go to the hourly chart, squeeze it up. And what are we doing? Well, we've been moving lower left to upper right. That's bullish. What have we been doing in the short term? We've been in a range, equal highs, equal lows. So on the hourly chart, we know until price broke out in a range, we're going to look for top third, bottom thirds, fake out breakouts. But now that we're moving from a range balance to an unbalanced on this chart, I'm now looking for these setups, momentum into pause or pullback. Okay. Now, as scalpers or day traders, we're going to go to a 1 or 5 minute, and we're going to look for smaller time picture trades using the previous day's range, high, low, midpoint, open, previous day's close. So let's go to that 3 minute, as S&P traders yesterday, when we came in, so we're clear, we were in a context 4, and then price broke out from an inside range day to an outside unbalanced bullish day, giving overnight traders a bullish trade. Beautiful. Then in the overnight, we kind of created this, high. So I put that in, and then look what happened here. Remember what I said, that these were going to be the setups in pre-market yesterday. So we were here yesterday. So I talked about it. I said, we're either going to do this and get the continuation, or we're going to get something that looks like this, a retest, or we're going to get a change of personality from an unbalanced bullish day, break and retest back into a balanced day. Well, we got number 2. We got the rejection of the previous day's high, and then it gave you a beautiful trade. And if you missed that one, then that was the other trade right there. We broke above and we had the momentum into pullback. So these, for me, this was the setup right here. If you nailed that setup, kudos to you, following our process. Now, if there's anything you don't understand about, number one, how we broke down the data, how we broke down the charts on a top-down approach, and then how we broke it down using multiple asset classes and stocks in the Trade90X 4 context one chart view, then hit us up at hello@trade90x.com. Make sure you sign up there, because again, you'll get, like I said, all of our pre-market, our weekly lessons. And when you do sign up, you also get free handouts, my free checklist, free free journal, and also you'll be I think I'm going to be adding a questionnaire. So again, make sure you do that. And again, anything, like if you want us to mention or talk about any topics, again, hit us up at hello@trade90x.com. All right, let's go enjoy the rest of our weekend, and let's look forward to another profitable week this week.